portfolio right now? And for the answers, we go to Bull Schatz. Our bull, rather. How do you like that, Paul? You're now Bull Schatz, president of Heritage Capital, and our bear, Mike Rubino, president of Rubino Financial. Great to see both of you here. Before I get to exactly what you want to be doing with your money right now, let me ask you a couple quick questions just related to the news of the moment. First of all, Paul, let me ask you, is the Iran nuclear standoff, is that, would you say, a cloud on the horizon for this market right now?
If you're going to use the weather analogy, so will I, and I'll say it's a chance of a very light sprinkle, but nothing to worry about, nothing to change your plans over. Like North Korea, like Syria, like Libya in the 80s, I think these are all just tiny geopolitical events that make news, but have very little effect on the market for anything more than a day or two.
Mike, do you agree with that? And let me also ask you, is Wall Street really expecting anything big out of G20?
Well, I don't expect anything big out of G20, but in regards to Iran, it's just part of the increasing adverse geopolitical cycle that we've been experiencing since 2001. If we look back, we find that there's about 16 to 18 years of good geopolitical situations and about 16 to 18 years of adverse. And we started adverse in 2001. We think it's going to continue to increase. This is just one step along the way.
All right, Paul Schatz, let's talk profits and the economy. Let's get your update. Were you informed by today's numbers? Are you a bull or a bear, my friend?
Larry, as you know, I've been bullish for a while, and I think on balance, over the next year, we're going higher. In the interim, I think the best chance for the first significant correction since the bull leg began in March is coming up early to mid-October. It lasts 4 to 6 weeks, and we go down 7 to 17%. But other than that, it's a correction within an uptrend. It's going to be a place to buy.
Mike, why are we seeing so much resistance, though, in these levels? I mean, why? A lot of people thought we were going to hit down 10,000 a little bit earlier. Here we are, treading a little bit lower today. Why hasn't it happened yet? Why the resistance?
Well, the biggest aspect of it is consumer spending, and consumer spending has really no chance of coming back with unemployment soaring and the housing market continuing to deleverage on a nationwide basis. I don't see how people can be comfortable spending, but when they're worried about their assets being depleted and making the bill.
But the consumer sentiment number today showed a real increase.
Well, consumer sentiment means you feel a little bit better than the horrid way you felt a few months ago. That's fantastic, but it doesn't mean anything is really improving on a whole.
Say, Paul Schatz, let me go back to your 7 to 17% correction. Let's call it 20% in round numbers. That's a big number. That's not chopped liver. Why are you saying that? What's behind that? Laszlo Barini was on the tape, technician. He's had a great track record. He says there's no correction. So where are you coming from on this?
I would respectfully disagree. I think the biggest opportunity for the correction comes in October. A couple reasons, Larry. Number one, you've got some smart money taking chips off the table very quietly, selling into openings, into big up openings, number one. You've got sentiment from option players really getting a little bit overcooked. People are getting a little too giddy about the markets. That's never been a good sign historically. A lot of people came into early September worried about September. I wasn't, because everyone was worried about it. People are feeling really comfortable. The reason I have the dates, early and mid-October, earnings are coming out. We had terrific earnings season last time. It's a rarity when you get follow-through season after season. So there's a couple things on the horizon. And listen, it's going to be healthy. 7 to 17% is not that much after a 50% rally.
No? Okay.
Point taken.
Okay.
All right. We're going to leave it there, gentlemen. Thank you. We appreciate it. Good to see you.
Up next, dissent within the Federal Reserve seems the exit signs are pointing